Hey guys, Stock Saturday, and it's a red week for me against the markets. The S&P and Nasdaq are both up around about 1%, and I'm down just over 1%, about £2,000. So, yeah, that's sort of mainly the options, very volatile, and sort of gold and silver been taking a little bit of a knock. So I've made some purchases. Thankfully, I do have Stellantis there right at the top, just like a rock, sort of appears to be approaching all-time highs. I believe was 21, or sort of last few year highs at least. So yeah, that's been helpful, and not really too bothered about a 1% drop in the grand scheme of things. Hoping for more going forward. So let's have a look at the news. So, always like to do the monthly check-in on Taiwan Semiconductor, just a good gauge for the general semiconductor industry, sort of see how AMD and Nvidia and people like that are going to be faring. If they're doing well, you would expect TSMC's revenue to be doing well in comparison. And they've had a sort of similar month to sort of previous months, a little bit above July, a little bit below August, 180 billion, and that's down 13.4%, pretty much similar to a lot of these other months. So yeah, this year sort of that they were suggesting was going to be a bit rough is coming to a close fairly soon, and we're hoping for a sort of reasonably good 2024. Although if we do get a sort of even a mild recession, then maybe 24 won't look quite as rosy. But yeah, still probably be, from what they're saying, a little better than this year. You know, even if we sort of get 5% up on this year, or sort of maybe 10% up, that wouldn't be too bad. And hopefully a sort of much better 25 if next year sort of brings a load of printing. So yeah, that's pretty good for TSMC. Does make you wonder about Nvidia. Presumably, sort of either Nvidia aren't exactly smashing through chips at the moment, or other companies are offsetting this revenue because Nvidia, I believe, have almost everything go through TSMC. So if they're rocketing up, then other people have to be sort of tailing off to make up this sort of average number, basically. So, yeah, if everything else was sort of firing on all cylinders and Nvidia was rocketing up, then you'd expect to see sort of a trend up during this year of AI. But, yeah, we'll see. And we've had CleanSpark's September Bitcoin mining update. So they've mined 643 Bitcoin in September, which I thought was a reasonably good number. Hash rate has increased to 9.6 exahash, so that's going up, and they are still sort of mining roughly what they mined, a month or two ago, a little bit more. So mining difficulty has been on the up again. I do project a sort of 2% increase in that, and so a 2% knock on the amount of Bitcoin mined every month. So they do have to keep increasing this hash rate to sort of keep pace with that mining difficulty. And obviously 200 days now until the halving. So, if they didn't sort of increase, then this would sort of rapidly become 320 or less. Obviously, with mining difficulty going up, it could be at 300. So they do need to get to their 16 exahash target. The other thing of note is that they're not selling much of anything. They sold 80 of those 643. And they now hold 2,240, which is quite good. Market cap's about 570 million, so 2,240 at today's increased price of $28,000 is a reasonable amount of the market cap, 62 million. So it's over 10% of the market cap in HODL now, which is pretty good. And they're saying the big expansion steel structure for building 1 is complete. Indoor switchgear is placed. Structures for buildings 2 and 3 are in progress. Basically, sort of all on track for end of year completion. Although they're saying they won't be able to energize the cards because the power line won't be ready. So they're looking at sort of early 2024. It's basically going to be ready for the halving rather than sort of getting a load of Bitcoin in sort of January, February, and March before the halving, as we were sort of hoping. But yeah, it's they're getting to 16 exahash, so that should be reasonably good. So I have made rather a large sell. I sold all of the remainder of my Sylvania Platinum. I sort of went through why I'd been selling half of this earlier on. Sold it at about 73p, so it's been up a little bit since then. Maybe should have waited, but I think the reasoning sort of for selling it was fairly sound. It was obviously sort of much higher back in 2021. We sort of had the rhodium boom, went to sort of $25,000, nearly $30,000, I think. And then sort of 2022, that's come off quite a fair bit. But the sort of mid-2022 prices, on the metals at least, were a lot higher than they certainly are now, and the stock was sort of around 80 to 90p, which it currently is. And when you look at some of the metals, so back when middle of last year when the stock was sort of around the 80p's, you had rhodium, for example, at $14,000 an ounce, which is now come right the way down to 4,100, and it's been that since July. Do start to wonder if it was a glitch in the charts, this sort of constant, month after month of no movement, and sort of checking around lots of other places, they're all reporting the same figure. So yeah, whether the market's just sort of dead at the moment, I don't know. But yeah, over 3 times the metal price sort of middle of last year, and the stock price was basically the same. So unless people are sort of anticipating an enormous run up, pricing in the future, I'm not really sure why we're still at 80p. It's basically the same on all the other metals. Palladium was sort of in the high 1900s to 2000s, and it's now at just dropped down to 1184. So that's not good at all. Palladium has been a bit better, to be honest. It was sort of at that time around high 800s to 900, and it's at 882. So platinum is sort of 65% of their output. So you could say 65% of their output is relatively stable and same as last year, but obviously it's the bigger priced metals that do provide sort of a lot of the revenue. So back when rhodium was sort of in the the mid teens and sort of 20,000, then it was 20 times, nearly 20 times the revenue of platinum, and rhodium was 12% of output, so it was the biggest revenue driver. Now at sort of 4,100, it's actually lower, I would believe, lower the revenue than platinum itself. So yeah, it's just not sort of promising to me. This has never been a particularly long-term trade, since of course the bulk of the demand for sort of all 3 metals is still petrol and diesel cars and trucks. So obviously that's not a long-term sort of solution, given the switch to electric vehicles. It looks like that isn't going to sort of stop anytime soon. China were sort of the biggest market for petrol and diesel, and they're now the biggest market for electric. Just saw a report from Clean Technica that they are now 40% electric. Not fully electric, that does include hybrids, which do have quite a bit of platinum group metals, but you can see the intent that they're going. It is replacing sort of dirty petrol and diesel cars, and I imagine they will be pushing fully electric as much as they can. So it's not as if there's a long-term idea that sort of rhodium would be getting back up to 20,000 and beyond. Maybe if there is just a severe shortage or a short squeeze, then possibly. But yeah, I would imagine those days are probably gone. I might be proven wrong, but the sort of fundamentals wise, you have to focus on fundamentals, and everything is basically a hell of a lot worse than it was last year. And the price has sort of barely moved. So for 80p, I think people are getting a bit excited about a dividend. They always think of a dividend as basically sort of it's your cash already. They're just moving it from their account to your account. They had sort of $120 million on the balance sheet, and that is priced into the stock. When they pay you a dividend, the stock goes down. So I don't see a dividend as sort of anything to be bullish about. You have to understand sort of where that dividend has come from. It's come from profits, and profits will be severely down with these prices. So I think dividends, not to sort of criticise dividend investors too much, but I do think it's kind of living in the past. Next year's dividends will come from current profits, which at the moment aren't really there. Last quarter they reported their we look at the last year, so April to June, they reported I think $6 million of net profit, and that was sort of with rhodium partly at $8,000 and sort of $7,000 through May. So for the entire last quarter, it's been $4,000. So you could potentially see a net loss, and paying a dividend, next year out of a net loss is not going to be pretty. So, you can look at the fundamentals now and sort of predict a dividend cut, or you can sort of wait until the results come out and then they suddenly say, oh, we're going to have to cut the dividend, and you could potentially see a sharp drop in price when people sort of suddenly realise that haven't been looking. This is a sort of small penny stock, you don't really get the analyst coverage sort of coming out and predicting dividend cuts like you would with a larger company. So I think you have to focus on this stuff a little bit more with smaller companies. But yeah, that is basically the thesis behind selling. Fundamentals have got significantly worse, and the price is sort of barely moving. I think in part due to sort of people not looking at fundamentals and just looking at a very large dividend, sort of about 7 or 8% of the market cap. So, or 7 or 8% of the share price if you think like that. So people are seeing a supposedly undervalued stock with an 8% dividend and carry on buying. So that has unfortunately gone. I did sell it in sort of ever so slightly in the red on capital, but with the dividends, I think I'm up sort of about £1,500 on the sort of overall Sylvania adventure sort of for the last 2 years or so. So that's worse than the market, to be fair, but it's probably saved me from a lot of downside in sort of 2022 of what I may have put it into, and maybe even more this year. So yeah, I don't think it owes me anything. So on to the news. We had the nationwide house price index, a little bit better than sort of expected. Previous month was quite significantly down, and this month is flat. Was expected to be down a little. So yeah, still minus 5.3%. See what the other surveys say. And then yet again, Wednesday, you had the ADP non-farm employment data sort of not agreeing with the official numbers on Friday. They showed a 89,000 increase, sort of much worse than the expected 153,000, and less than half of last month, 180,000. And I'll just skip ahead to Friday. And then you had a blowout beat from the official sort of government numbers, 227,000 last month. This has been revised from 187k, so you get them sort of come out and say, sorry, we forgot to carry the one, and last month was actually a lot better than we thought. 40,000 jobs that they sort of forgot to count. I do think this is a little bit of sort of manipulation, but this month had a consensus of 170,000 and they got 336. Similar on the sort of private side, similar on the government side and manufacturing. Basically everything was better than expected. Although unemployment was sort of expected to come down, and that stayed flat on last month. So 3.8%. Does seem a little bit strange, sort of blowout numbers a few months in a row. Well, yeah, not really sort of a few months in a row, but you are often getting sort of blowout numbers on payrolls and an increase in unemployment. I think the UK was getting the same. So lots of people losing their jobs and sort of even more people getting new jobs. Not the same people, presumably. And Wednesday you had the ISM non-manufacturing PMI for September, sort of bellwether of the US economy, and that was exactly as expected, slightly down from last month, but in the positive, above 50. So all the sort of PMIs and ISM data were looking sort of relatively strong. S&P construction a little bit low, and initial jobless claims sort of pretty much as expected, slightly lower than expected. Friday you had the Halifax house price index for us, again slightly better than expected. So on the year it is down 4.7%, but was expected to sort of be a little bit worse than that. Mortgage rate 7.93%. This is showing that people aren't bothering to remortgage or get a proper deal. They're just sitting on standard variable rate, unfortunately. And US hourly earnings were a little bit better than expected. On the lower side, of course, they don't want these particularly high. This is sort of easing inflation, hopefully. So 0.2% for the month, not too bad, and sort of 4.2% for the year. So obviously annualise the monthly and you're at sort of 2.4%, so that is even lower than the yearly figure. So more of these to come, hopefully. So portfolio-wise, had sort of a reasonably good end to the week, although a lot of my bits and pieces are sort of slightly down, except Stellantis, as I say. But yeah, not a huge amount of change in the invest account. ISA-wise, as I say, sold Sylvania Platinum entirely and sort of put part of that just into the money market fund. I did initially sort of sell off a little bit of that and put it into Coeur Mining and Equinox, but yeah, sort of had the Sylvania selling thought later on and sort of top that back up again. So, and I've got a little bit of cash which I was sort of intending to buy something in yesterday, but I didn't end up doing that, so might just do that Monday. If not, I'll just put it in the money market fund. So yeah, more Coeur Mining, more Equinox Gold. It's still sort of down at what I consider a reasonably low price, as long as they can sort of bear through this time of sort of low 1800s on gold and sort of $21 on silver, then I think they're going to come out the other side of this really, really well. They spent sort of part of last year at sort of 1800s, sort of high 1800s and 1900s, and they've sort of been at 1600 sort of in the last few years. So yeah, I think sort of mid 1800s is relatively fine for them, even with a sort of slightly higher oil price. And it just shows, a slight net loss or sort of very low profits, and people think obviously they're never going to make any money, but they are sort of expanding and sort of spending money on that expansion makes the figures look worse, but eventually once it's done, then they'll reap the profits. Kua Mining's is sort of almost finished, and Equinox Gold is June next year, when they'll be at sort of hopefully 850,000 or more ounces of gold per year. So ready for hopefully a really solid gold price. They're sort of building while gold price is, low and sort of volatile around these prices, and hopefully when it rises, they'll be ready rather than sort of building when the price goes up, which I never like. So yeah, really happy with them. CleanSpark sort of rocking around. It's in the red for me now in this account. In the other account, I'm still sort of well in the green. So green overall for CleanSpark. I think I'm at about $3.30, and it's now $3.75. So yeah, fair enough. And yeah, I haven't bought any more Fortuna silver mines. I just see the other two as sort of slightly better value, and similarly with First Majestic. So yeah, that's that account. No change at all in the IG account. And Interactive Brokers, a slightly green week on the Chinese tech, although it sort of doesn't really move from these prices a huge amount. And then yeah, the options sort of with lower gold price, the sort of lower miners prices does whack the options sort of on a much more leveraged basis. So probably lost about 1,000 on the options, and sort of put best part of another 1,000 back in. So yeah, these are now at 6,300, although yeah, I am still adding. So I think I'm about 3,000 down on these options now, but they are sort of largely end of next year and sort of end of 2025 options. So that is the whole point of them. It's reasonably sort of longer term. Most people sort of doing options are doing it for a month or two, or even less. So yeah, we'll see how these go, and I'm still continuing to basically buy these. This is sort of my highest risk reward play that I can see, even more than sort of altcoins. I am even considering selling some of my sort of smaller altcoins that I feel are starting to struggle, and sort of obviously you can look at what I can see as potential of them in the bull market, and sort of yeah, you might get 10x, 20x tops for some of those, and I can see sort of 20x on potentially some of these options, and sort of obviously the underlying the underlying thing with them is sort of gold and silver and crypto with CleanSpark, or sort of Bitcoin rather than a speculative altcoin. So obviously there's more risk with miners than the underlying sort of commodity itself, but yeah, I feel that's maybe a better bet than sort of some of my risky altcoins that have sort of dropped 80%, and I'm sort of hoping for them to come back in the next bull run. So yeah, certainly on the watch list they are. So yeah, that's the portfolio. Underperforming, but hoping for the long term. So leave your thoughts in comments below, and like and subscribe. See you soon.